All right. Hello, everybody. This is Tom Randall from GoldenCare. Want to welcome you to the webinar this morning, and we'll get started here. Hopefully, we'll learn a few things and be able to get you excited about a few things to help you out when you're out in the field. First of all, before I get started, I want to tell you thanks, shout out to Chris Barnhouse for setting this up. Appreciate that very much. And as we go through, we are in presentation mode, just to let you know. We'll have these slides available for you, so you don't have to worry about that. But I do want to let you know that we will have a presentation mode on this webinar, so we won't be able to open it up for questions, etc. That being said, let's jump right into it. Welcome on a Monday morning, bright and early. Talking about long-term care doesn't get much better than that. But I do want to tell you, and I know that I'm talking to a group that has a lot of experience, and a lot of you on the call today do have a lot of experience with long-term care. So I'm not going to spend tons and tons of time boring you with the stats, but I will tell you that I'm passionate about long-term care. I've been doing this for over 20 years with GoldenCare alone, and I really know there's a problem in America that we are, as agents, have a responsibility to fill. So that's really one of the things I think that we've been so successful here at GoldenCare, by helping agents like you go out and help people. So hopefully you'll see that that's kind of the goal of what I'm trying to accomplish today with you folks, is give you some alternatives and different ways that we can go out and help people. And, you know, we know the whole story. If I'm talking to brokers in LDC 101 or Senior 101, we can get in and bore you to tears with all the stats. But we know there's a lot of gray hair in America. We know there's more people in seniors in America than there are people in Canada, et cetera. So we know the aging America is there. People are turning age 65 every 10,000 of them a day with the baby boomers out there. So we know there's problems with our social programs in America. We can't live in that entitlement mentality that we've had. Depending on what study you see, and you know how confusing that is if you've been in the trenches, there's $100 trillion of unfunded liability exposure out there that we've made promises to some of these people in America that's just not going to be able to do for some of our kids and some of ourselves. So we know there's problems, and there's huge issues with that, not only including the huge volunteer costs. There's 34.2 million Americans providing unpaid care to people, and that's a huge deal. I tell you what, again, I don't mean to keep saying huge, but I just want to let you know, there's a lot of people out there struggling. There's a lot of people looking for answers. We know long-term care is expensive. We know all the stats of $100,000 for nursing home costs as an average. We know that, you know, assisted livings are about half that, but with a la carte, they can be just as expensive as some of the nursing homes in some areas. And we know with the home health care, where people want to stay at home, that there's huge costs associated with that. And we're going to have care shortages and all that other fun stuff. So we need some flexibility in our long-term care policies. And of course, we all know the odds. Hopefully most of you on the phone have been out in the trenches, and you know it's huge. It's not a coin flip anymore. 70% of the people over age 65 are going to require some type of long-term care. We know the women, they don't play nice and die like us men. We know women have a much higher risk out there of needing care. If you're a married couple, tell you what, some of the studies are saying there's a 90% chance that one of them are going to need care. So we know the odds are out there, and we have to provide solutions. So one of the things that we're happy about, and again, Mutual of Omaha, there's a reason we're number one in the industry right now with these products, because it does a lot of nice things for people. If they're healthy enough to get a traditional long-term care policy or a hybrid long-term care policy, few do it as well as Mutual of Omaha. And you guys know, most of you on this call, I'm sure, are from Northwestern, so you know how strong those top couple policies are. And kudos to you folks. And I always talk about the fact that we always say competition, but at the end of the day, we're out to help as many seniors as possible. So as I talk about Mutual, I'm not going to spend tons of time beating it in your head about why we appreciate the fact we got to help design this policy, but I do want to show you some of the highlights for some of you who may not be as familiar. First of all, in the Mutual portfolio, there's 2 long-term care products. All you have to remember is they were both designed with the same actuarial concepts in them. The custom solution product is the one that I recommend because it does some things that Secure doesn't. Again, it's all priced on the same concept, so there's not any weird pricing deals. The key is it does a little bit better and is a little bit more flexible. And I'm just going to spend a minute to show you about that, and again, show you why this might be something you're going to want to look at. First of all, the first one is easy. The benefit multiplier, traditional long-term care, 2-year, 3-year, 4-year, et cetera. This is just based on a pool of dollars because you can get benefits in different ways. The first big difference is with Mutual of Omaha is that cash. It's a very flexible product that at the time of claim, you can jump in and get cash benefit first day coverage. With custom, you can get a 40% on the right-hand side there. With secure solution, it's still great. You can get 30%, but we did want that 40% to be a little bit higher on the custom. More importantly than the cash even, and cash is king, you can use it any way you want it, so it's one of the biggest reasons mutual is number one. But the reason I really like the custom over the secure is that flexibility on inflation. We know these policies aren't as inexpensive as they were 20 years ago, right? We know these policies are expensive because they pay a lot of claims. More inflation protection options give you more flexibility to design plans to work for people. Okay, so that's the biggest reason. There is more partner benefits and there's more return of premium options. Not going to bore you with that today. I just want to make sure you know custom solution, whether you're a novice or a wily veteran, custom solution is the product you want to look to first. Okay, first day cash we already talked about. There is waiver of home health care elimination and 200% for professional home care. I'm not going to beat that up on this call because we only have a limited amount of time, but when you're selling policies nowadays and spreading the net wider to help more people, that 200% professional can give you a great way to sell a smaller plan and still give a more robust benefit, twice as much for those most expensive types of home care like nursing, et cetera. Okay? Inflation, I already talked about that and teased you with that. I'm going to show you a couple more slides on that. And with the inflation buy-up, that's the biggest reason we like this, because of the fact you can have that guaranteed buy-up. Okay? But let's talk about inflation real quick for some of you who may not be up to your neck in long-term care. We know most companies don't have the flexibility of all these quarter point options that we have with the custom plan. But the reason we do that is because inflation is where the expense is, right? One inflation point from 4 to 5%, for example, is approximately a 26% premium difference for folks right in our wheelhouse for a 55-year-old. That's a big difference, isn't it? 18% of current industry sales out there are either future purchase or no inflation because these policies have a big expense to them, and people are out there, they're afraid to sell a 3% or 5% inflation. Guaranteed buy-up gives you that flexibility to give you a security branch for your clients. It's included with the custom like I talked about. It's not with the secure, so that's why I tell you to sell the custom first. And basically, a guaranteed buy-up says, hey, when you have that policy in force, as long as you haven't been on claim in the last 2 years, you can go ahead and do a guaranteed buy-up. It expires 20 years after your policy issue date or age 75, whichever comes first, but it gives you a lot of flexibility in the years in between. So when we're selling to those younger folks who are trying to pay off their houses, got people in college, all these different things that they're worried about spending the extra money, you can sell them a smaller inflation earlier on and let them know they have the security to go ahead and buy up. It's a great way to lead your client into a price point where they can afford it. And again, 1% inflation increases the benefits by a third in 30 years. So I just wanted to show you, even if you go sell our lowest inflation at 1% with buy-up, even that has a little bit of power over the long term as opposed to not selling any inflation at all. 1.5 obviously increases it quicker using the rule of 72. Okay? Let's look at pricing. Again, I'm not going to go into full product training today, but I do want to get it's significant enough that these quarter points, we didn't put all these inflation options just to try to be the company out there that has more than anybody else and try to impress you with numbers. We're trying to impress you by making it more affordable for more people. 0.25 inflation is about a 6.5% premium difference. If you look at an average couple sale, let's say $4,600 for a couple, 6.5% savings, $300. You know, a 0.5 change is nearly $600 a year. That can be the difference between that couple pulling the trigger and not pulling the trigger. 55-year-old couple, if you look at that there, 3% inflation down at the bottom, $4,000. That's a 15.5% savings over selling 3.5%. Okay, so it's a big difference. That's what I'm trying to show you with the buy-up. Because you have the buy-up, you can do that with people and say, I'm going to sell you a little bit smaller, 2% today, or even a 1% or 3%, and tell you that you have a pill that you can increase it if you want to. Okay, so 10 years, 15 years, 20 years in lifetime, we do have some flexibility on our inflation. And again, those are available with the custom. And we have the guaranteed upgrade option available, just like I talked about several times. Okay, so I'm not going to go into the rest of the long-term care part of it, but I do want to talk a little bit about pricing, because I will tell you this, we know that people out there need this coverage. We know the baby boomers are turning and all that other fun stuff like we talked about. But why aren't people buying? Is I'll tell you what, there's people out there right now who aren't getting asked. Look at that for 65 plus year olds. Those are people over and above our wheelhouse for our average age. 37% of them haven't even had a conversation with anybody about long-term care coverage. 17% have spoken about long-term care with a financial planner, and just 6% have spoken about long-term care with an agent. So it really shows that that's the difference out there, is that some of us have to do a better job of rolling up shirt sleeves and making sure we're going out there and asking the question, have you taken care of your long-term care needs? Okay. Over and above that, the biggest thing I want to point out today is, of those that people actually do have a conversation with as agents, what's the number one reason do you think consumers aren't buying traditional long-term care or a good hybrid plan or whatever it might be? Is it because it's too expensive? The answer is false. One thing I've realized from studying this industry, people aren't worried about the expense today. What most people are worried about is they're worried that it'll become too expensive later. That's one of the things we have to understand. People out there are worried about rate stability. So we know the population's aging. We know the government can't pay for the care. We know long-term care offers the best leverage out there. We know that claim satisfaction rates are very high. And we know that persistency rates are through the roof with long-term care. I will tell you this, a lot of agents, and hopefully you're not one of them, they don't recommend traditional long-term care because they fear that conversation about rate stability. So I want to spend just a minute today, because I have you on the phone, just to talk about traditional long-term care rates, because I know a lot of agents are out there who are selling long-term care. They're actually quote-unquote LTC specialists, and you know what? They've backed up from offering long-term care to their people in their close circle because they're a little bit worried themselves, like, oh, I don't know, I don't want to offer somebody this and then have the rates go nuts, whatever the case may be. All I want to make sure you understand is, as an agent, look at the facts out there. Modern long-term care policies, the way they're priced now, very stable rate-wise. And I know you guys know that because a lot of you sell Northwestern. Great product. Mutual doesn't have the legacy block of business causing all the problems. The pricing that we have today, Society of Actuaries out there are looking at it saying these products are very, very de-risked nowadays. They're very stable. Lapse rates are now set when they design these policies at under 1%. They used to design them like life policies where they figured they'd have a huge amount of people dropping the policies. The investment returns, we know the ROI is low. It's a huge difference in pricing. Now they price these policies lower than they've ever done it before because they know we're not going to see those huge percentage returns as a company. Claim rates, more conservative than ever. Now they understand they have 70 times more claims data to decide how to price these policies. So again, I know hopefully I'm preaching to the choir in a lot of this, but I want to make sure you know the regulatory requirements because of the Rate Stability Act, et cetera. These products today, especially with gender pricing, are pretty stable. So feel comfortable going out there and showing people a long-term care traditional plan because you're not going to have those huge rate increases we've had. Look at this. This is 2014 from the SOA. Down at the bottom there, so I just wanted to show you. They came up and said there's probably a 10% chance that they'll have a 10% rate increase on these policies they're selling today. The newest data from 2017 said it's about a 5% chance. They really think these products are pretty safe. So I'm not going to go out and sell it to people and say it'll never have a rate increase because it's senior health insurance, but I will feel much more comfortable as an agent going out and saying, hey, you know what? I'm not going to tell you it'll never have a rate increase, but it's not going to be this garbage you're seeing on the internet. Those are those old legacy blocks of business. The policies we sell today are very stable. Okay. What I want to talk to you today about for the last 15 minutes here is traditional long-term care is more stable than ever. We got hybrid products out there that do a great job as well. But one of the things that the big twist is what you're seeing on the screen. You know these stats if you're in the trenches at all. 44% of the people ages 70 to 79 just aren't going to qualify for this type of coverage. That's of a field underwriting, right? We just don't write these older folks traditional long-term care, even some of the hybrid plans with these policies nowadays like we used to be able to throw it out there and just about get everybody insured. Got it. Excuse me. In the good old days, I've been doing this a long time. Remember, I've helped design 7 generations of products out there. And I was there in the heyday. People, we could go out there, throw the net wide. You'd have people come in for meals or whatever it might be, do a seminar or whatever it was. You could get most people covered with good old long-term care. There was very few people who got declined compared to what it is today. 2003, all of a sudden, some of these companies, Genworth got into trouble, and some of those other carriers got into trouble and started jumping ship. There was, I think, 132 companies selling long-term care when I started in 97. And now there's only, that very small handful selling today. But in 2003, we started to see the issues start. And all of a sudden, companies got a little bit smarter, and they started saying, we better make this a little more selective. We're paying a lot of claims already. Today, we know it's gotten worse, right? All of a sudden, I put those little graphics on there to show that people have tons of meds out there. You know what? We know all those meds, when they add up, there's problems. We know that people who are pre-diabetic are actually diabetic when you look at the medical records, and companies are running from them. The legacy block of business I already talked about, there's huge rate increases there. So companies are cautious as well. And a lot of companies, we know, Genworth just announced they stopped selling the individual long-term care as well. We want to take what we have today and really kind of look at it and say, why don't we figure out a way to help more people? Genworth back in the day, remember when their career shop went under, they realized we used to be able to send mailers out and get an 8% response. Nowadays, those are long gone, right? Anybody who's ever tried a mailing lead knows you're lucky to get your 1% nowadays. You got to be able to go out and spend some money if you're going to get leads through the direct mail. Every time we get in front of somebody, we can have an opportunity to help them. But the problem is it's much more expensive and harder to get in front of somebody nowadays, especially somebody who might qualify for some type of coverage. So what we want to do is take that pie chart I showed you earlier and really help more people. And it really is going to take a paradigm shift. And we've spent a lot of time here at GoldenCare educating our agents. You know what? You can't go out and just be a long-term care guy anymore. You can't go out and just say, all I do is sell long-term care. If they don't qualify, I walk away. Now we started getting more and more agents, what we call setting the table, where they say, hey, you know what? I love long-term care. I'm going to sell you long-term care. I'm going to teach you about long-term care. But if you can't get long-term care, I might have something that I can help you with after the fact. More effective than skipping the meal altogether, but a lot of people then feel like they're getting the B team, right? Oh, well, geez, you talked about how great long-term care was. I don't know if that's something that I need now when you're going to scale it down. What we're trying to do is show you a way that you can feed just about everybody. And again, that sounds crude the way it's written, feeding everybody, but I tell you, you can help more people if you're smart. And when I mean everybody, I mean almost everyone. When we talk about some of these peripheral products that we offer in our perfect portfolio here, this is a Kemper Home Care. We're the largest agency in the country selling Kemper long-term care, Kemper Home Care right now. And one of the reasons is it fit perfectly into what we were doing. Because when I'm in front of somebody and I get to sit down with them, I can say, let me ask you this. Have you had anybody right now who's in a nursing home or assisted living? Or are you currently receiving home care benefits? See number 3 there? And if they have, I can't sell them. Are you physically unable to perform those ADLs? If they have, I can't sell them. Are you going to replace your health insurance? Number 2 there. That's the knockouts, you guys. That's what I mean when I say almost everybody. And Kemper Home Care is the one we're the top in the nation at, but GTL has an even better home health care plan out there. This is the one we tell most of our agents, look at GTL home health care if it's available in your state. Indiana, by the way, has both of these. Okay, GTL's home health care, almost identical. The only difference is it says, have you been in a nursing home, assisted living, or receiving home care right now? Are you unable to perform those activities of daily living, just like Kemper? And it adds on one more little thing, are you cognitively impaired? Okay, that's the only difference. If you're selling the most robust plan down there, option C, which I'm not going to be able to tell you all about today, but if the most robust plan they have, they ask one extra question, and it's not a huge smoking gun. In the next 60 days, do you expect to be admitted to a hospital, nursing home, assisted living, or require home care, or have a surgery? So you can see there, we're throwing that net really wide, you guys. I want to make sure you understand that nowadays. You're missing the boat if you're out there saying, I only walk up and sell long-term care or hybrid plans, because there's a lot of people who just aren't as healthy anymore in America, and you have to have solutions for them. So all I want to show you today, I'm not going to talk a lot about all these different products, obviously, on this little call, but I want to make sure you know we have whatever kind of product you may need when you get out there, whether the healthiest people who can get traditional long-term care or hybrid plans out there, or the people who are the least healthy. You can see Kemper way down there, where almost anybody can get that plan. Okay? I want to make sure you know the lighter underwriting products do have some muscle. Okay? And one of the other things a lot of people say is, well, it's not available everywhere. I do internet sales, and half the states don't have these products. I want to make sure you know that's really not true. There are a few states like California, Minnesota, Florida that are really tough to have products in, But look at the state availability, and you can have these slides obviously later. You can see all the colored ones besides white have the home health care available, at least either Kemper or GTL. If you throw in some of the other products we have, like Critical Cash or Recover Cash, you can see the net is spread even wider. Again, very few states besides out east. There's a couple white ones, Florida and California. So wherever you're selling, you have a product that might help. Let's real quick look at GTL's Critical Cash. And I just want to show you, this is a product that we designed with GTL. And it was one of those things saying, maybe not to the point where GT Kemper's plan is, where everybody can get it, but this plan covers a ton of people who can't get traditional long-term care. Let's look at GTL's Critical Cash. Again, I'm not going to be able to train you in depth on it by any stretch, but I do want to show you, this is not a bad option, especially if people can't get long-term care. This is right out of the Excel quotation tool that I built for GTL's Critical Cash. And you can see here, nice big bucket of money. There's a lot of flexibility with this plan, but this is our most popular plan, a 2-year plan. And basically it says, if you have cancer, heart attack, stroke, Alzheimer's, any of those conditions, you can have the ability to get up to 24 months of coverage right off the bat. And it's a lump sum payment for the home care. So you can get $1,000 times 24, for example, or 24 grand up front. If you go to assisted living, it pays more. If you go to a nursing home, it pays even more. And you have a lot of flexibility how you design these plans. Okay. All I want to show you is a crossover claims on this call, just to carry you to maybe ask about this. If you look at Alzheimer's disease, stroke, and cancer, 70 cents of every dollar for long-term care claims pays for one of those big three, we call it, cancer, stroke, or Alzheimer's, right? If you look at this plan, this is a critical illness plan that has a lot of long-term care flavor. If you look at cancer, stroke, and heart attack, you can see there, that's 80% of all new CI claims in America today. Huge crossover. When you throw Alzheimer's on there, the crossover is even more so. So again, would I sell this plan instead of long-term care if I get the healthiest person I meet? No. Long-term care does some more things. But would I sell this plan to somebody who can't qualify for regular long-term care? You bet. It's a great, great option and a great alternative. Not only that, these other slides I'm going to go through real quickly because of our time constraints, but basically it'll even pay where long-term care wouldn't pay because it's a CI policy as its chassis. So you don't need to worry about the 2 of 6 ADLs. You don't have to worry about a 90-day care. Upon diagnosis, this product pays. Even if you get better or if you die, this product pays. So it's not chronic illness like long-term care. You might have a stroke, get a full benefit payment, and 3 months later be out golfing. Doesn't matter. With this policy, it pays on diagnosis. It pays the full amount it promised. Okay? Different GTL critical cash underwriting conditions. Again, this is more for me to hand out later, but I do tell you, you can have ADL limitations, you can have autoimmune diseases, you can have narcotic pain meds, you can have memory issues, a lot of things here that you're going to have the ability to get coverage with where you just couldn't do it. Osteo, there's the diabetes we talked about, pacemaker, rheumatoid arthritis. You have the ability to get coverage where you typically would have to run for the door with long-term care, as most of you know. Even the way this plan is designed where you can sell A, B, or C plans, and again, I can't get into it deep today, but we have the ability, even if somebody's got some problems with stroke scares or cancer, you have the ability to sell an alternative type of plan with this as far as a B plan or a C plan. So you can sell some different coverage here to help just about everybody you're in front of again. Okay? And don't forget about the home health care plans. That's saying if they're healthy enough where they can't get long-term care, but they're healthy enough to get critical illness, we have an option. And again, if they're really unhealthy, you can pivot right away to the home health care plan. Kemper's plan, remember, just about anybody can get it unless they're receiving care right away or living in a facility. And we have GTL's plan there as well. So we have alternatives to offer just about anybody. And with these plans, remember, they're not that weak. You look at these plans, and sure, the underwriting's so simple, almost everybody can get it. But look at this plan on this screen right here. Home health care base benefits up to $150 per day for a year, $54,000. And we talk Kemper into the fact that you could buy 2 plans because we know people want as much coverage as possible. So you could sell the same person 2 different plans and get up to $300 per day or $108,000 total benefits. Okay? And if you look at that, basically it's set up saying if you have people care at home, it's a home care plan. different types of services on the left-hand side. It'll pay different amounts up to $150 a day or $300 a day if you buy 2 plans, which is very popular. Home health care aid benefit, $40 a day for 60 days. Again, we know everybody loves home health care aids. It's not a long-term care policy, but at least it's coverage for somebody who absolutely positively couldn't get a long-term care policy. They have some protection. Remember, it's up to $80 per day for $4,800 if you buy the 2 policies. Okay? And you have to have a prior hospital stay in a lot of states or 0 prior hospital in some of the states. I just put those on the screen. And then they have 1 optional extra benefit page or extra benefit rider. And you can see there that that's very flexible, and I won't be able to get into it today, but it does have some additional coverage, including that vision coverage that a lot of people need. With the annual physical, it's not covered by Medicare, as most of you know, $150 back right there. Very, very affordable. The reason that I want to show you this plan, and when you hear buy 2 plans, you get spooked thinking, well, who's going to buy 2 policies? That's expensive. This plan is super affordable. They have a built-in prescription drug reimbursement that, again, you'll see these slides later, but I will tell you, almost everybody can get it because it's not based on what they actually pay. It's based on the retail cost of those drugs. So in this case, you can see their total retail cost for 3 meds up there. They didn't even pay close to that amount, but on the retail side of it, it added up to $373. They pay a $50 deductible in most states, and they get 80% of that back. So in this case, the client would get $250 back. I know I'm going through that really fast if this is brand new to you. I just want to let you know, this policy is built to be very, very, very affordable. If I gave you an example, $305 is the annual premium for a 65 to 70-year-old for the basic plan in Indiana. Most of the people who aren't healthy enough to get long-term care are going to be on meds. If they get that $250 RX back, they basically have an effective yearly expense of $55. That's $4.65 a month. That's a quarter a day. Come on. This policy is very affordable for a lot of people because of that prescription drug reimbursement. Okay? That's why you can buy 2 policies. GTL's home care is even better. It's more flexible and more robust. Basically, remember I told you could buy 2 policies with Kemper? Real quick, I just want to show you. This GTL home care plan is very, very powerful because it has a plan A, B, and C built right in. Not going to kid you. We sold GTL. We designed that critical cash policy. They basically looked at Kemper saying, well, if GoldenCare is the #1 seller of this, maybe we should come out with our own home health care plan. And they kind of copied what Kemper was doing, but they made it even better. Okay? Again, I don't have time to do a full product training today, but do you want to know? Look at that plan C. Up to $450 per day, $162,000 in the pool of money. Home health care benefit, even better than what we had with Kemper, which was $40 per day. Here you could go all the way to $120 per day, $7,200 maximum. No prior hospital stay required in any states for GTL's home care. And they have 4 different riders you can throw on there. And that dental vision rider down here, very, very strong, very powerful. And remember, with this one, there's a built-in prescription drug benefit as well. So you have the ability to keep this policy very, very affordable for a lot of people. But most important, remember, it's something that they couldn't get regular long-term care or regular hybrid plan. It's a good solution for people who just don't have any other alternatives. Okay? So let's look at really quick, this is the last slide. I think this is a 61-year-old female in Indiana. And what I want to show you with this one is a lot of agents out there really are helping clients. They go out, they want to sell long-term care first. That's their first arrow in their quiver. But if somebody's not healthy enough, if you look at this 61-year-old and they're looking at it saying $5,000 a month for a $180,000 pool of money, 3% compound, mutual would come in about $4,000. Okay? Person's not healthy enough to get long-term care insurance, so we're not even going to be able to go there. But just to you as an agent know about the cost point that this person might have jumped on. And you look at the alternative combo over there. If I sold a GTL critical cash, an 18-month benefit period, again, don't worry about all the details here, but I just want to show you a nice, solid combo of protection for that person. $1,000 base benefit or $18,000 upon diagnosis of those major conditions we talked about. If they go to a facility, God forbid, they get an extra $5,000 every month to help them. So it really does give them protection they couldn't get anywhere else. And they get a pool of money of $324,000. Nice big pool. Premium for that is $1,000. But on top of that, you say, one of the things with critical cash, it's based on diagnosis. Maybe you're not going to have some of the coverage that you would want to have because of mobility issues or whatever it may be. Let's look at a Kemper. We can get you 2 full packages of Kemper, put the premium at $916 for that, and you're going to have that extra coverage right off the bat with that home care policy on top of the critical cash. Total premium, $1,900. I can't read it from my screen, $1,944. Okay, so basically, again, deep stuff here, but it is something a lot of our agents are really starting to embrace, is saying, why don't I go out and maybe sell 2 policies to the same person to give them even extra protection? So in short, basically what I'm telling you is long-term care is where we made it butter our bread at GoldenCare. We know that that's the best option you can have. These hybrid plans out there are great options as well. But if somebody's not healthy enough, that's what we specialize in. We specialize in helping agents like you go out and help as many people. Spread the net wider, help more people, and obviously that'll give you the ability to make more money. So I could go in more. I think I'm probably at my half-hour mark here. So I'm going to let you go, but before I do, I want to let you know our website address, if you want to check out GoldenCare in general and see some of the tools we have. I got a whole list of them on that screen there, and I'll make sure I give these slides out and make sure you have your access to them. But GoldenCareAgent.com. Go on there and check out some of the different things we have. Ask about our lead and referral tools. Thank you very much. Again, I want to thank Chris if he jumped on.
Hey, I'm back on. I just wanted to let everybody know the other thing to talk about is great support from GoldenCare and getting the illustration software from Mutual of Omaha, because Mutual of Omaha software is beyond doubt the best illustration software in the industry. So I just throw that in, and they do have great support.
Well, thanks a lot, Chris. Thanks, everybody, and I'll let you go because I know I promised to try to be done here in about a half hour. So thanks a lot, everybody. Appreciate it.